you. Thank you, Crystal. And thank you, American Heritage Credit Union, for the invitation, for their trust, for their partnership. And welcome everyone to today's presentation, Credit Reports and Credit Scores, getting the most mileage from using credit. As Crystal mentioned, we welcome comments, questions at the end of the presentation. We'll be able to address those, so do not worry about that. And I also want to let everyone knows that there are handouts that goes with this presentation, and they will be sent after the presentation is over, as well with the recording of the presentation, as Crystal mentioned. Okay, so with that, welcome everyone to today's presentation. Money Management International, who are we? Well, Money Management International is a national full-service, non-profit financial education and counseling organization. Our mission is to improve life through financial education. Money Management International is approved and certified by the National Foundation for Credit Counseling, and we are also certified by the U.S. Department of Housing and Urban Development, and that is HUD. Services. What services we provide? We provide budget and credit counseling, which is available 24 hours a day, 7 days a week, and it's available over the telephone and over the internet, and it is free and confidential, 24 hours a day, 7 days a week. One of the best thing about this budget and credit counseling is that we have a dedicated phone number for all members and non-members of the credit union. At the end of the presentation, you will be able to see that phone number. So we welcome everybody to make an appointment. It is free, confidential, and just talk to a certified counselor about your personal finances, just to see how are you doing, setting goals, checking your credit report, and just talking to a certified financial counselor. Other services that we provide debt management programs. We also provide pre-bankruptcy counseling and education, student loan counseling, credit report reviews, and post-disaster recovery counseling. Under the U.S. Department of Housing and Urban Development, which is HUD, we offer all types of counseling and education when it comes to housing. Pre-purchase, post-purchase, foreclosure prevention, home buyer workshops, pre-rental, post-rental, eviction prevention, landlord-tenant responsibilities, Fair Housing Act, refinancing, and many other programs and services under the housing area. We also have a free online learning program. It is called learn.mmiuniversity.org. At the end of the presentation, you will be able to see that link. That is a free online learning program. There are several topics in that area. You are able to create a username and password, and it's very interactive. There are handouts, exercises, calculators, and different topics all related to financial literacy. All right, so with that, we'll go ahead and start. So that is Money Management International. And again, we welcome American Heritage Credit Union members and non-members, and we also thank them for their trust and partnership. All right, so these are today's workshop objective. I'm going to explore what credit reports and credit scores are. Specifically, I'm going to show you how you're able to obtain your credit report. How are you able to request your credit report? I will also show you what is the purpose of a credit report. What happens if you find that you have that you have errors, that there is information that is not correct. So I'm going to show you how you're able to address those errors on your credit report and what are the steps that you're able to take if you find that information. I'm also going to show you how to protect yourself from identity theft and what action to take if you do become a victim. Understanding credit scores, how credit scores are calculated, and what they mean. And the last thing is strategies. I'm going to give you some strategies so you're able to impact your existing credit scores, also to continue to manage your credit in the right way. How to establish credit if you do not have credit established, how to establish, or if you already have credit, but you have some negative information out there, how to reestablish that credit report history, that credit history. Okay. All right. So lots of good information. And remember, the handouts that you will be receiving have all this information. Well, let's just take a moment to think about what is it about credit reports, credit score, credit in the US. There is always lots of questions. Always there is people talking about credit, and we seem to be getting the answer from different areas. But it is very important to really know what are the correct answer. What is the correct information when it comes to credit report? A lot of times we just want to know why it's so important to use credit. What information is shown on the credit report? Why, how can I improve my credit report, my credit score? And how, if I have not so good of a credit, what impacts has on me? And why? Why do I need to have a credit? Why do I need to use credit? Why do I need to have a credit report? Well, a lot of those questions I'm going to be covering in today's curriculum, today's presentation. Okay. And, but it is very important that when we have questions, when we have concerns, that we go to the right source, to the right source. And it seems like everyone has, the correct answer. Sometimes we're talking about friends or coworkers and then or relative and everybody's kind of like have the right answer. So it is very important to go to the right source to get the correct answers. All right, so why is credit important? Why is so important to have a credit report history? Credit transactions and decisions that we make about credit can affect our credit report history. It is important to know how these decisions can impact financial opportunities. And when we use credit, it will affect us in many, many ways. Good credit, having a good credit history, how do we use, if we're using credit the right way, can lead us to approval and lower interest rates. Okay, interest is the cost of using credit. Um, so if we have a good positive credit, it will allow us to have an approval right away. It will allow us to have a low interest rate when we are applying for a bank loan, a personal loan, credit cards, and also more housing options. I will talk a little bit more about this in a few minutes. And also insurance and services, job opportunities, and of course, when we are applying for a car loan, better terms on car loans. But what happened if we have a negative a negative credit report. So maybe we may get denied for a loan application. We may not be able to get a job if we are applying for a job, or maybe the insurance will charge us more, or we will not be able to get a good interest rate. So it also affect us if one of the ways that using credit, one of the ways that it will lead us to have a negative credit if we are using more than 80% of our available credit, if we having too much debt, okay, if we have too many accounts open with too much balances, also if we're doing too many requests for credit application, all of this can really lead us into a negative credit report. So again, how we use credit can affect our credit report in both positive and negative ways. Okay, so more information about this, I'm going to be talking in a few minutes. All right, so let's think, let's get this scenario that you are the lender. Okay, that you are the lender, and you have John. You are a banker, a lender, and you have this person. This consumer is John, and John would like to borrow some money from the bank. They want a personal loan. Okay. You as the lender, you will like to know some things about John, about that consumer before you agree to lend him that money. Okay. You probably want to know if that person is working, what is the credit report history, what is the debt to ratio income that they have. They also you probably want to know if John is going to be able to pay the loan back. Um, you also probably, as the lender, want to know how John has paid their obligations in the past. How much does he owe to others? How many more balances he's carrying? How many other loans he is carrying? So it is very important that you as a lender um, know these answers, before you as the lender decides to approve that loan. Okay. Um, well, just imagine you as a lender and many other lenders have to ask this question, have to research this information. Just imagine that you have to do that individually, individually have to research each applicant to find all this information. So when your bank, you as a lender, decides if they're going to approve the loan or not. Okay, so in the past, that's how it was done, but it was not always accurate. Okay, it was taking a long time. uh, Banks will not able to grant that many loans because it just takes a long time. So that's why the introductions of the credit report bureaus or credit reporting agencies were established, and they use a standardized collection, and a standardized way that they collect information and they report information, so they are able to assist, they're able to give information to lenders, to bankers, to many other financial institutions very quickly, and the lenders are able to review the consumer credit report history, and the lenders are able to make lending decisions. Okay, so yes, so there is a standardized way, and these are the credit report agencies, credit reporting agencies, or credit bureaus. So let's talk about them. Okay, let's talk about them. So credit report history, credit reporting agencies or credit bureaus are privately owned companies. Okay, they don't belong to the government. Uh, and what they do is that they receive information, they catalog this information, and they maintain the information. So what do they actually do? They again, they maintain records, they receive records, they maintain records, they keep them in a computerized way, and they're able to distribute the information that they collect to subscribers via credit report histories. Okay, so yes, when Equifax, TransUnion, and Experian collect this information, they are the ones who they are the ones who put together our credit report histories for all the consumers. One thing very important about these three credit reporting agencies is that they do not make lending decisions. They do not approve nor deny credit. And again, credit reporting agencies only report the information that they have collected in the form of a credit report history. Also, these three companies, they do not belong to the government. They are privately owned. Experian is located in Texas, Equifax in Georgia, and TransUnion is in Pennsylvania. And the last thing about these three credit reporting agencies is that there's no law that says that every single bank, every single lender have to report to them. They choose who do they want to report that consumer account. Okay, some banks do report to all of three. Some banks or financial institutions report only to two. Some banks report only to one. Okay, and there's some businesses that they do not report to any of them at all. Okay, and is this is okay? Yes, there's no law that says that they have to report. So it is volunteer. Reporting is volunteer. Okay. All right. So these three credit reporting agencies built our credit report history. Our credit report history. This is an example of a credit report. So we ended up, all of us ended up having three credit report history, one from each credit reporting agency. So what exactly is a credit report? It's a record of how an individual has repaid credit obligations in the past based on information supplied by the creditors. So the creditors supplied the information to the three credit reporting agencies. The credit reporting agencies put our credit report together, built the credit report based on the information that they receive from the credit reporting from different sources, from different banks and institutions, financial institutions. Okay. Remember, we all have three credit reports, all three credit report, one from each of the three credit reporting agencies. All right. So what information is in the credit report? What information are we able to find in our credit report? Our personal identification information, uh, the credit accounts, all the credit accounts that we have, our credit history, public record information if we have filed for bankruptcy or any other public information, collection agency accounts information, alerts and validations, consumer statement, and we have the right to put a consumer statement in it. Inquiries or investigations from companies that have requested our credit report file. All that information is in your credit report, in our credit report. What information is not on our credit report? Our race, religion, medical history, political affiliation, checking nor saving account information. Our income is not shown on our credit report, or any investment accounts or long-term savings that we are participating. That information is not in our credit report. Okay, so very important to know that we have three credit report history. Okay. One important thing to know that if you don't have certain information, excuse me, reported about you, that section will be blank on your credit report. Okay. So for example, if you don't have any bankruptcy, then that section will be blank. Or no tax liens, that will be blank. Okay. There will be nothing under that category. All right. My question to all of you, have you looked at your credit report lately? Have you looked at your credit report histories lately? Remember, we have three credit report histories. All right, so how are we able to obtain our credit report? You are eligible. You are eligible for a free credit report from each of the three credit bureaus, three credit reporting agencies. So please keep in mind that your score will not be included on your free credit report. Although you may purchase your credit score anytime when you order your report. And I'll talk more about scores in a few minutes. So because I mentioned that these three credit reporting agencies are privately owned, consumers really advocated, and the government came up with some laws. One of those laws was established in 1970, and that was the FCRA, the Fair Credit Reporting Act. That law back then says that the three credit reporting agencies, Equifax, TransUnion, Experian, needed to provide a credit report to the consumer when they requested it. Back then, there was a charge. There was a charge back then, but at least consumers were able to see our credit report. Then around 2002, 2003, and another law was created, kind of more like an amendment, but it's another law, and that was the FACT. And the FACT stands for the Fair and Accurate Credit Transaction Act. So that law says that we are eligible to request our credit report for free once every 12 months under annualcreditreport.com. Okay, so you're able to request it via the internet, by mail, or the phone. One of the handouts that you will be receiving is the form that it was downloaded from the Federal Trade Commission, the FTC.gov. That is the agency, that's the consumer government agency that has all the information about these consumer laws. Okay. It used to be every 12 months. For some reason, 2023, after the pandemic, now we are allowed a copy extra for free. So you just need to check to make sure. Do not pay for your credit report. Do not pay for any of your scores. There are so many ways that you're able to get it for free. But very important to request and check and revise your credit report. Okay. Purpose. Why is so important to check our credit report? What is so important that if we have a credit report history established, why is so important to manage it the right way? Well, I mentioned a few minutes ago that credit can affect us in many ways. So your report serve many purposes. Your credit report may be used for credit approval. I mentioned that. Employment. Yes, employment, many companies, when you are completing your employment application, it will ask you, they have to ask you for permission. And that is, they have to tell you that that's one of the background checks that they want to do, especially depending the job that we're applying for. So yes, they can request to check our credit report if we are applying for certain jobs. To underwrite an insurance, yes, automobile insurance, many companies are requesting our credit file as a resume, as a reference, to underwrite us an insurance, and that is for car insurance, automobile insurance, and homeowners insurance. Also to issue a professional license, and that is just one of the requirements. It can also be used in response to a court order or federal jury subpoena. It can also be used by the Internal Revenue Service, and also is used to review or collection. Okay. Another important thing to note is that if for some reason you apply for credit, if you apply for any credit, and you had been denied within the last 60 days, you are entitled to a free credit report. So very important to know that we need to know what happened. If we get denied for any reason, we need to know what is going on. Okay. Because credit reports are used for so many things, it is critical to make sure that your credit report file, your credit report history includes accurate information. So very, very important to know that. Also, I wanted to mention something very quickly is that credit report history is like our resume. It becomes like a report card. Okay. So it shows banks, financial institutions, and many other um, uh, areas out there what type of consumer are we when it comes to paying our obligations, to pay our accounts. Okay. All right. So you review your credit report, and you want to make sure that the information is accurate. Okay. Information is accurate, that your name is well spelled, that your addresses, current addresses, that your information is correct. Why? Because credit reporting agencies, Equifax, TransUnion, and Experian, obtain information from consumers, creditors, public records, inquiries, consumer statements, and collection accounts. And errors can occur. Okay. Why we need to really look to make sure that there are no errors? Because it may cost us loan approvals. It may cost us lower rates on interest and even employment. Okay, so it is very important that you check your credit report for errors. And remember, you must check all of three. We all have three credit report histories. Okay, so you review your credit report, and as a consumer, it is your responsibility to check the information on your credit report for accuracy. Okay, it is our responsibility. So any incorrect information, again, may really be negative to us. The law that was enacted back in 1970, and that was the Fair Credit Reporting Act, this law sets up a procedure where consumers can dispute information or errors on our, on their credit report. Okay. So it is very important that to know that you have the right to dispute information that is wrong or outdated and have it removed from your credit report. So you can file the dispute online or by mail. Credit reporting agencies must investigate the dispute by contacting the creditor, who has 30 days to respond to the agency. The creditor must certify that the information they reported is correct. Okay. And if they cannot verify the account, or they fail to respond within 30 days, they must remove the information from our credit report. Okay. You can also dispute credit report information directly with the incorrect information source. Okay. It is important for you, and this is all under the Fair Credit Reporting Act, which is the FCRA. Make sure that you keep copies, do a log. Who do you talk to? Information, date, time. What is the error? When did you mail the information? When did you send? Keep a log of all the information. Please be careful of services that advertise that they will fix your credit for a fee. You know, many of those are scams. Many of those are not. They probably know the law more than we do. Um, just know that you can do this yourself for free using the information that I just explained. And remember, all this will be in your handout. All this information will be in detail in your handout. Okay. Now, one important thing is that creditors and credit reporting agencies will not remove information if it is truthful. Okay. If it is a, an information that is true, they're not gonna remove. Okay. If we owe it, we owe it. Right? Okay. All right. Another reason why it's so important to check our credit report is to make sure that we're not a victim of identity theft. Okay. For more information on identity theft, please go to identitytheft.gov, and you'll have this information in the handout. You can also go to the Federal Trade Commission, ftc.gov, for more information. They have a lot of data, a lot of statistics, and they also have step-by-step of what to do. But according to them, and this is the information that we took from the Federal Trade Commission, one of the ways to deter against identity theft is by shredding documents, protecting your social security number, safeguard your personal information, browse only on secure websites, don't use obvious passwords, keep information in a safe place, and never click and unsolicited texts or emails, especially when they have those links. Okay. Detect, how are you able to detect identity theft? Denial of credit and you don't know the reason, expected bills that don't arrive, unexpected credit card statements or letters or bills that don't belong to you. Um, Make sure that you check your statements as soon as they arrive. I know many of us use now online, everything online. Make sure that when the statement comes on, make sure that you check it out, making sure all those charges are correct. um, Communication about purchases that you didn't make if someone called you and is charging you money, and if you check your statements and you don't recognize any of those charges. Those are ways for us to detect identity theft. What happens if we are already a victim? If we suspect that something is going on, we need to take action immediately. It's very important to place a fraud alert on our credit report. Review each of the three credit report carefully. The alert will tell creditors to follow certain procedures before they open new accounts on your name. Contact the security or fraud department of that company, follow up in writing. There is under identitytheft.gov, there is the ID theft affidavit. Keep copies of everything. Very important to file a police report. Very important to report the theft. And that communication with the three credit reporting agencies is very, very important because by law, under the Fair Credit Reporting Act, if we do this and if we are a victim of identity theft, the three credit reporting agencies cannot report any of those accounts that they are in questions. They cannot report. Those accounts cannot appear on our credit report histories. All right, so credit scores. Okay, so what exactly is a credit score? Well, a credit score is a number that creditors use to assess the likelihood that consumers will repay their debts and make payments on time. This number, this three-digit number is generated using a statistical computer model that takes information from your credit report history. So the credit report, the credit score is not a part of your credit report history. It's a snapshot. It's like photograph, an instant photograph of our risk at the time that we are requesting that credit, at the time that we are requesting that loan. So at that moment, the score is generated based on the information being shown on our credit report. Okay. Very important to know that scores typically ranges from 300 to 900. There are several score models out there. The three credit reporting agencies use their own score model, but there is also in a score model, there is very widely used, and that is the FICO score model, the FICO score model. So again, credit score helps predict repayment and risk. It's a tool used to make lending decisions, and it is calculated based on the information being shown on our credit report on that moment. So FICO is the most widely used credit score, and that is what I'm going to be explaining here. FICO ranges from 300 to 850. Okay. So these are the five components that the FICO score use. So 35% is payment history. 35% is payment history. This means how if we have collection accounts on collection, that's hurting our score. If we're paying late, that is hurting our score. So 35%. 30% is the amount all to a creditor. Is utilization, the utilization and our lines of credit. We should not be using, according to FICO score model, we should not be using more than 30% of our line of credit available. So for example, if we have a credit card from ABC store and we have $1,000 line of credit available with them, the max that we should be charging is $300. So 30% or less. Okay. And then the formula is not only calculate individual accounts, but also all the accounts. What is the line of credit? What is the amount of credit that I have available, and what are my balances? What is the total balances? That it also should total 30% or less. Okay, so that's part of that formula. The next percentage is 15%, and that is the length of credit history. How long do I have credit established? Okay, how long do I have credit established? That's 15%. So try not to close accounts right and left. If for some reason you are going to close an account because you don't use it anymore, try not to use it for 6 to 8 months. It becomes dormant, and then close it. It will still have an impact, but not as much if you close it too soon. Okay, let it be inactive, let it be with no reporting for 6 to 8 months, and then close the account. The next percentage is 10%. And 10% comes to new credit or inquiries or investigations on your credit report history. There's two types of credit inquiries. There's two types of investigations. The first one is soft inquiries. These inquiries will have no negative impact on your credit score. Which are those? If we are applying for an employment, if we are applying for a service, a utility, a cell phone, cable, heating, electricity, if we are if we receive pre-approved offers in the mail, those are soft inquiries. Another soft inquiry is insurance, and another one is us, the right for us to request our credit report. That is a soft inquiry. We'll have no negative repercussion in our credit score. Which ones are the ones that we need to really keep an eye on it? And those are the hard inquiries. Those are the hard investigation. Those are the ones that we initiate when we are applying for a line of credit, when we are applying for a loan, when we are applying for a credit card, when we are applying for a credit. So we need to go baby steps. We should not be applying here today and then applying there tomorrow and applying there the next week. Too many credit applications, too many hard inquiries will have a repercussion in our credit score. So we need to go baby steps. And then the last 10% is just the mix of credit that we have available, just the mixture of line of credit. If we have revolving credits, our credit card, if we have installment loans, if we have mortgage loans, if we have lines of credit through the bank, if we have home equity line of credit or HELOCs, if we have personal loans, etc. So the secure loans. So that's just the mix. 10% is the mix. Okay. So credit scores definitely affect our credit, our interest rate when we are applying for credit. Higher score means better rates. Um, Higher scores may be easier for us to get a loan. So this is an example. Who will get the loan? They both want to buy the same vehicle, same amount, but Sheila has a higher credit score where Marco has a lower credit score. So who do you think is going to get the loan? Well, probably they both will get the loan, okay? But she will probably get a better a rate. Okay, she will probably get a better rate because she has a higher credit score. Okay, so any interest rates can really have an impact on that. So what is a good credit score? Remember, FICO is from 300 to 850. Um, um, and a score under 579, so between 300 and 579 is very poor. And a score between 580 and 669 is fair. And a score between 670 and 739 is good. Okay, 670 and 739 is good, and a score between 740 and 799 is very good, and a score above 800 is exceptional. Okay, so let's keep that in mind. All right, so here it is. Credit score impacts interest rate. So again, they are buying the same vehicle, same amount, same terms, but she ended up having a better interest rate. So her monthly payment is going to be lower. Her interest paid is going to be lower than him. Okay, so remember how scores really have a big impact in our purchases. All right, so how to positively impact our credit report and score. So it is important to take some steps to positively impact your credit report and make sure that you keep it in a right standing. Review your credit reports for accuracy. Make sure everything is correct. Pay your bills on time. That's 35% of your score. Uh, be aware of that utilization, 30% or less. Remember, be aware of that utilization versus the line of credit available. Pay accounts in full each month, and this is based on the budget. It is very important to understand that using credit is an advance loan. Using credit is an obligation, and it should be part. We can be paying with credit cards everything, but we need to have that amount in our budget. So if we pay with credit, we have the amount to cover it at the end of the month. Okay, you can go to myfico.com. They have lots of great information, resources. They have a community library in there for more information. If you need to establish credit, the best thing out there is a program, is a tool that the banks and credit unions have, and I know American Heritage Credit Union has it. It's called Secure Credit Card. A secure credit card. That is the best tool to start establishing credit. It is also very important to have a good relationship with a financial institution, with a bank, or a credit union. It is very important to establish a checking and saving account look at what all debts you have, reestablish consistent payment history, and that is to reestablish your credit. Okay. There is something called an authorized user, and I'll explain that in a few minutes. And the next slide. Okay, here it is. An authorized user is an arrangement that allows another person to use the account. They are not legally, that authorized user is not legally responsible to pay the account. However, account activity is reported to the credit file of both accounts owner, okay, on both the account owner and the authorized user. So if you're helping someone, if you're helping a daughter or son to establish credit, this is one of the ways that you can help, because the account is get reported to both the owner and the authorized user. It is also a way to help someone, teach them how to use credit. Co-signer or co-borrower are contractually liable to pay the debt if the primary account owner fails to pay. Credit bureaus report this loan and payment on both the primary borrower and the co-signer. Okay, and very important to know about this relationship, about this agreement. If the person that you serve as a co-signer failed to pay the loan as agreed, both credit scores and credit reports will be affected. Okay. Some consumers think that co-signing for someone to help them, it's a friendly favor to grant. However, co-signing is a serious financial obligation, which places limitations on the co-signer's ability to access credit. So carefully consider the consequences before agreeing to be a co-signer, or you may be asking someone to be a co-signer for you. So very, very important on that. So be careful. Also, we have joint accounts owned by more than one person. So both accounts owners are responsible for charges on the account, and individual accounts owned by one person. So that person is the only responsible for those accounts. Very important to know credit scores. There are many ways that you're able to check your credit score for free. One of those is through Credit Karma. Credit Karma, you're able to see your score and your credit report, but only from two of the three credit reporting agencies, only from Equifax and TransUnion. Okay. Credit Sesame is also another way to see your score. And I know many of us who are customers of financial institutions where we have credit cards, they are able to give us the credit score. It's the FICO's credit score. I know Discover does it, Capital One, Chase, Barclays, many banks allow us to obtain our credit score, our FICO credit score. All right. Okay, so I have covered lots of great information. I explain what credit reports are, how you're able to obtain your credit report. I mentioned what are the credit reporting agencies, what do they do, what is the purpose of our credit report, what happens if we have errors on our credit report, preventing identity theft. I mentioned and explain how credit scores work, and give you some tips and how to positively impact your credit score. So while we wait for any Q&As and comments, today's presentation is designed for educational purposes only and should not be construed as an investment, tax, or legal advice. And here is our website, Money Management International, moneymanagement.org. There is our free online financial literacy program, learn.mmiuniversity.org. And there is the American Heritage Credit Union members and non-members dedicated phone line available 24 hours a day, 7 days a week. Okay, so take advantage of that. Talk to a counselor. There's confidential, there's no obligation, there's nothing that we're, no selling, no marketing, no nothing. And just see how your finances are doing.